Hello and welcome to the Blue Collar Wealth Club. I am one of your hosts, Sheena Garcia.
And I'm your other host, Jerry Garcia.
So today we want to talk about investing beyond your business. So a lot of times we talk about investing in your business, and then potentially selling it later and all those sorts of things. But today we want to talk about investing outside of your business. What are some other vehicles to truly build wealth outside of whatever you own?
Yeah, we want, we talk a lot about trying to get you to a position that you have extra cash flow and extra money. And we want to also talk to you about what to do with that money so that you're establishing wealth beyond your business. So you have potentially even money coming in every month from something that you're not doing. That's a great part of what we're trying to build for ourselves. And we would love to be able to help others establish that same kind of wealth for themselves.
Yeah. And to preface, neither of us are actual registered wealth advisors. We're just sharing our opinions.
These are things that we've found that these are our opinions. These are things that we are looking to do for ourselves and things that we believe in. Obviously, you're going to want to talk to somebody who is a wealth advisor who can guide you along the way onto what you should do best with your money for A, for tax purposes, and B, for wealth building, and C, for just quality of life, extra income.
Yep. And I love a good financial advisor, but a lot of them I have found have a tendency because they're in the market, in terms of the stock market and all that stuff, they are very like, you should be in the market too. And they want everybody to be everything in the market. And they really only see those traditional investment vehicles as a great idea, where I think there's kind of an area for a lot of different investment vehicles, right? So buying additional businesses, maybe buying a bolt-on, or, maybe buying something that is cash flowing and you don't have to be in it. So I think it's Cody Sanchez is all about buying laundromats and car washes and all those sorts of things, which those can be great vehicles too. So I like to look at all the different investment vehicles because there's so many of them out there to choose from.
Yeah, and some of them provide different avenues for wealth building. Like I said, some of them are great for tax purposes because you get lots of depreciation. Car washes are good for that. Laundromats are good for that as well because they have equipment that you can depreciate over the time that you own them. And so they're great for reducing your tax liability while also providing you with some cash flow, especially if you're buying them cash or if if you've paid off your financing for those. Those can be great cash vehicles and great tax vehicles.
Another thing that we've looked into is rental properties. So I know a lot of people with rental properties. I've actually worked with a family that at one point had over 200 doors.
And in rental properties, there's lots of different types of properties, right? Most people traditionally think, hey, you buy an investment property, another house that you own, that you rent out to a person or family, and you take that income and help it pay off your mortgage, and it's just extra income for you, along with building equity in that house. But you can also take that same house, and depending on your laws and your municipalities, you can make it an Airbnb, make it a short-term rental where you may be able to make a lot more money, but it's harder to get financing for those. And it's also a lot more work because you have to get not just one renter for a year, you have to try and get multiple renters per month in order to cover your mortgage and all of your expenses. There's going to be additional expenses.
Well, and you also have to, make sure it's clean because you're basically running a hotel at that point. So you're a hotel with a staff of one. You have to deal with all those customers. If you're renting a long-term rental to one tenant family, you have to deal with one tenant family that is maybe or maybe not an issue for you versus with like an Airbnb, you're dealing with different people every weekend.
You may by yourself be able to manage one rental pretty easily. An Airbnb, you might start looking into having a management company that's more familiar with that because you have the booking system. You have to establish how people are getting keys or codes to get into the place and what the exit procedures are. You have to have a cleaning crew, like you mentioned, and there's different types of Airbnbs. I've seen very normal looking condos or townhouses or even duplexes or single families that just very normal, furnished. You rent for the day, for a week, whatever, and that's it. We've also seen some very extravagant ones where it's a larger property and they dump hundreds of thousands of dollars into amenities with like great outdoor amenities, great like inside amenities. And these are more for like people who want to rent a house, maybe for a bachelorette party, or for a maybe a small company get together, and they want to have this really nice place, which is great because you can rent it out for a lot more, but tons more upfront costs with that. So it's going to take you a lot of time to get that money back.
Well, and also you have to think about maintenance costs on something like that too, right? Because if you're designing it for parties, and you have to think about the fact that, okay, so if we're designing this for parties, then everything good and bad that comes with a party is coming with this rental. So there's probably going to be, you're going to have a budgeted line item for fixing random things that might break when people are partying.
And beyond that, you could take these same properties and you can do executive housing, where you have like travel nurses who may not be able to do a full year, but they may be here on contract for like 3 months. But at the same time, if it's a 3-4 bedroom house, they may be willing to share, and they just pay their portion for their bedroom for that 3-month contract.
Yep.
So there's a lot of different ways, to skin a cat. In this case, we're talking about just rentals. And beyond this, you can even go into larger scale rentals, things like syndications, where there's groups of people that come together, and they have different members of their team that do different roles within this, but they go out and they find these apartment buildings that have been owned by the same person for 20 years. And it's a little bit run down, but it's in a great neighborhood or an up and coming neighborhood. And they figure they can buy this at kind of a discount. Maybe the owners haven't been raising rents at the rate of their competitors. And so you can buy this property at somewhat of a discount, put some money into it to fix it up, slowly increase rents to where they should be based on the market. And then down the line, you can sell it for a profit. It's like fix and flipping a house, but for apartment complexes. Now, most of these people have the expertise, but they don't have the capital to do this on their own. So what they do is they go out and they collect money from a bunch of people in a syndication to put the down payment down, to pay for the upgrades, to just make sure they have reserves in case anything goes wrong or they're over budget. And yeah, they implement the plan that way. So that's an opportunity where you can invest as an investor into one of these deals, and you can get a return on your money, and you literally don't have to do anything. Sometimes those come with tax benefits as well.
Yeah. I mean, I think that with any investment strategy, you have to think about, this is anything. Again, right? What are your goals? Like, where do you want to go? Any strategy, and I will say this until I can't speak any longer, that every strategy will get you somewhere. But to get to where you want to go, you first have to know where you want to go. And then you have to find the strategy that's going to get you there. So all of these things we're talking about will get you somewhere. You have to figure out, okay, what is your goal, right? Like, do you need your investment to be liquid, or can it be illiquid for a long time? So some of these strategies we're talking about lock up your money for years.
Yeah, 5-10 years.
Yeah. So you have to say to yourself, okay, this money could just go away from me for 10 years and I'm okay with that.
And the idea being it goes away from you for 10 years and it comes back and it's grown into more money.
Yes. Always the goal is more at the end of it. But sometimes I think people don't recognize that whatever you're deciding, the liquidity of that asset is a huge consideration, right? If you're going to go buy even a single family rental, that's not a liquid asset. You cannot access those funds, right? You can only access the rent, and then you have to pay the mortgage. And so you only have that tiny little snack, and hopefully you're setting some aside for maintenance and things like that. There's a lot of considerations there. So if you need something more liquid, then maybe something like a CD or a high yield savings account. So always have some money available to you for those emergency funds. So I see so many people that are like, oh, I want to build my portfolio. I'm going to take all of my savings and put it into something.
Yeah.
And it's like, no, wait a second. We need to have a really fully fleshed out emergency fund, and we need to have a really good runway and cash reserves for your business before we start investing into long-term assets.
Yeah, and this is where some people have gotten in trouble in the past. If you think about the 2008 housing market crash, lenders were being very loose with their money. Essentially, if you had a pulse, they would give you a house and they would give you a loan for a house. they did what was called stated income back then. You literally just say, hey, here's how much I make. And they say, great, sign here. And they would give you these mortgages that were like super low payment right now, but they were variable rates. So as soon as rates went up, the payment went up. And then that's what caused a whole bunch of people to lose these houses, especially, I know a lot of people who bought multiple houses at that point in time. If you've ever seen the movie The Big Short, and he's flying out there and he sees this this dancer who's buying this property, this very large mansion, because the bank is just allowing it. So I know some people who did this really well and a lot of others who didn't do it so well. Some people I know were able to utilize that, use it very well. They were smart about keeping money aside for reserves for things break, their houses. And usually when you're renting, you call your landlord. And if you own, you are the landlord, and you're the one who has to pay for when that dishwasher breaks, or when there's a leaky pipe, or when it's found that there's, the foundation is cracked and, because water has been leaking into it for the last 5 years. We always are going to recommend building the right way. We will never suggest that you take all of your money and put it into something, especially an avenue that's not liquid, without first of all, we'll never do that. But we want to first establish, before you really jump into investing, that you do have that runway. You do need to have these emergency funds put aside for your personal expenses, and your business should have the same thing. You should have enough money aside in your business that you can survive for at least 6 months, even if another dollar didn't come in the door, because you need to be able to float costs a lot of times with the types of businesses that we talk to. There's a lot of upfront costs to some of these jobs. You want a bigger job, you're going to have to pay for a lot of materials up front. And you have to be able to do that and still operate your business at the same time without affecting your ability to make payroll or your ability to pay yourself and pay your own bills. So
many times people will do the other direction and then they grow broke. And so you want to make sure you're on a really great financial footing before, going into investing. But I like what I call I guess I don't call it but it's the 70-10-10-10 rule. I did not make this up. So somebody else did, much smarter than me. But, taking your earnings and saying, okay, 70% of what I make personally is going to go to paying my bills. And then 10% is going to go to charity. 10% is going to go to active investments, and 10% is going to go to passive investments. And you can do this in your business too, and saying, okay, 70% of what my business brings in is going to go back into the business, right? It's going to go to paying all the bills, growing the business, all that stuff. The business is going to flow itself. And then 10% is going to go to, if you're a charitable person, 10% is going to go to charity, 10% into active investments, and 10% into passive investments. So passive investment is truly something, and this is where I get so frustrated with people using the term passive on a whole bunch of crap that is not passive. Passive means you are not involved in the day-to-day management. A rental home is not a passive investment unless you have a management company. Yeah. And even then, sorry to tell you, it is not passive, okay? It's active. You have to do stuff. Putting your money, giving your money to, the Merrill Lynch guy and he deals with it, that would be passive, because he's dealing with it and you just look at the report every 6 months or whatever. But most of the things you hear these days, like, oh, do this, it's passive investing. No, it's not. It's active. So know the difference.
If you're putting into something that is active, you have to have the time and the energy and the effort to put back into those investments if you want them to make money. And there's plenty of people out there who are looking for capital, who need the money, who have these plans, who have these established routines for how to deal with this. We talked about the apartment complexes, but it's something that we do with attempting to purchase businesses. Sometimes we need more capital than we have access to. And we have some people that we would reach out to at that point and say, hey, we're about to purchase this business. Do you want to own a piece of it for X amount of dollars? There's no shortage of people who have ideas, who are good at what they do and just need more money. And those can be passive opportunities for you, but know that everything comes with a risk, and you need to know who you're getting into business with, and you have to be willing to take that dollar amount that you're handing that person or that company and have it go to zero and make sure that it doesn't affect your life.
Because it's an investment, and with every reward comes a risk, right? And we can try to mitigate that risk as much as possible. But I mean, even in the market, there's tons of risk. The market has tanked like you wouldn't believe over the last couple weeks, and people are like losing their shirt and going crazy. But it's like with everything, you have to be okay with the ebbs and flows of investing, because there is no reward without risk.
And if you can't handle those ebbs and flows, then there are a lot more safe vehicles that you could put money into that will grow. It'll grow a lot slower, and that's the other side, right?
Yes.
The faster that somebody tells you something will grow, the higher the risk is on the other side. That's why you're getting that large growth, because that is, if everything goes to plan, you'll get this great return. But if anything goes wrong, that return will be less, or it may be zero return, or you may actually lose money. Just know that higher risk, higher reward. There's a lot of low risk options too. If you just want to kind of dip your toes in, we talk a lot about having high yield savings account or CDs, where it may lock up your money for a period of time, but you can always break those and pay the penalties and get that money if you have some sort of emergency that exceeds what you have put aside.
Yeah. I mean, in most CDs, like as long as you've had it in for at least half the time, usually you just lose out on the interest that you would have gotten. Very rarely do you ever have to actually lose money, but I mean, you can. And, just maybe looking at your portfolio as a full portfolio, looking at your investments in the market as just, even if those are diversified, but looking at that as only one portion of a truly diversified portfolio.
Yeah, because like we said, we've talked about a lot of different types. We've talked about real estate. We've talked about the stock market. There's just a lot of different places you can put money. And within those categories, there's a lot of subcategories. We talked about real estate in probably 5 different ways,
Yep.
but there's still at least a dozen more that we could talk about. So just know that, whoever you're giving your money to, you need to kind of research them, understand them, know who they are, and get to trust them before you hand them any money. And just know that the more diversified you are, the more protected you are against big dips, because most dips don't happen across the spectrum of industries, real estate, stocks. There's some give and take there. So the more you're invested in across the board, the more protected you are against those big dips in the economy.
And just, think to yourself, does this feel too good to be true?
Somebody tells you they have a gold mine.
Okay, so we had this dude. Oh my gosh, we were in this networking group years ago, and this dude was like, I have this amazing investment opportunity. It's a gold mine in Bolivia and blah, 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 blah.
Literal gold mine.
A literal gold mine in Bolivia. And so then, I don't know why, but I've watched Gold Rush a few too many times, which actually totally helped me in this situation. So yay, thanks, Gold Rush. And the guy was talking, and I was like, oh, is this a tailings mine? And he was like, how do you know what that is? I'm like, reality television, thank you very much. and he was like, yeah, it is. I'm like, oh, and I'm like, and this is a pretty politically polarized country. I'm like, what's to say that the government, if you guys actually did, A, it's a tailings mine, which means it's already been mined, so you're just getting the leftovers. Like, B, what's to say that the minute you guys actually did hit pay dirt, that the government wouldn't come and just take it.
And just say, yeah, this.
And he's like, oh, well,
country.
that won't happen. I'm like, okay, that doesn't really feel that encouraging to me. And then he showed me this beautiful spreadsheet on Excel that had no names, no nothing on it. Just here's our projections. If you give us $20,000 when the gold mine gets up and running, which, is coming any day now, you're going to get it's going to be $1 million back. So literally $20,000 in, $1 million back. And again, I've watched me some Gold Rush, and I'm like, these guys do this all day, every day in Alaska. And this is not, that's not, they don't put 20 grand in and get $1 million back. It's a very expensive operation. They're always going on and on about how expensive this is. So I was just like, I don't know. My BS meter was going off you would not believe. Well, now, many moons later, because I know people who unfortunately did not have the same BS meter as me and you, they did invest with this human, and now they're in lawsuits. That's fun. Yay, because the whole thing was bunk. So if someone tells you a $20,000 investment is going to get you $1 million back from a gold mine in Bolivia, they're lying.
I mean, yeah, so do some research on anything you're thinking about investing in. Anybody who's actually trying to make you money will usually have some sort of a good presentation, but
Real prospectus.
And yeah, even the scammers will have something that makes it seem good, like a very pretty spreadsheet, but that doesn't really tell the story, right? You can do a little bit of research on the topic, have some questions that you can ask. Let them tell you what the plan is. They need to have a really good, solid plan. A lot of the syndicators I know that work with these apartment complex investments, they do this for a living, and they spend a lot of time. For every one property that they decide to invest in, they've probably underwritten another 99 of them that they decided not to for one reason or another. Ask them why this apartment complex. Ask them why, research the topic, find some questions that you can ask. And if they seem very well prepared to answer, that can give you a little more comfort in that person and that company knowing what they're doing. And if it's just like, oh no, that won't happen, or vague answers like that are never a good
Or
sign.
any day now.
Yeah.
Any day now is not a date.
Any day now is the same thing that your customers tell you when they haven't paid you yet.
Right? The check is in the mail. Yeah. Yeah, don't do it. But basically the point is, look at different investment vehicles, really decide like where you want to go, try out some different things, and make sure though that it's money that you don't need to fund your current operations, and that you're never, ever, ever like taking a bite out of the cake of your business in order to fund something else. You want it to only be the icing.
Absolutely. Yeah, that should only be extra money. You shouldn't take your lunch money and go gamble with it. That's the thing. We talk a lot about growing right, not growing quick. And so the guys who grow quickly tend to be the ones that fall the fastest as well. If you're growing properly, it takes more time. It's much more boring. It's much more drawn out. And you may see these guys that are being flashy, and just most of the time that doesn't work out the way that they plan.
Yeah. And it's like Fire Festival. How did that work out? Okay.
We'll see. They're planning Fire Festival too now.
Yeah, that guy, I have words. Anyways, well, think about your investments and how to maybe expand your portfolio. And if you have any questions or want to talk about alternative investments, Jerry loves talking syndications. So
We're talking lots of alternative investments.
So feel free to reach out at bluecollarwealthclub.com, and we will see you next time.